Good morning, everyone. It's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in today's live stream, we're going to start by talking about the US dollar, what the market is doing so far. And as you can see, looking at the charts, you can see how nicely price came into that inefficiency, resting right here, like I said. And after that mitigation, the next thing we saw was an expansion to the upside, and potentially it's heading towards this low resistance liquidity. This is my next draw on liquidity, and I wouldn't be surprised to see an expansion into that zone to run out this buy side liquidity. And if we go to the weekly time frame, remember, like I said yesterday, this red zone right here still remains our extreme premium zone. I'm going to try to wipe out the things that are relevant to my chart so we can just focus on the relevant things. So right here, I take this out as well. So the red zone, as you can see, that is an inefficiency. And also if we use this Fibonacci from the low to the high, you can also see that that area is also our extreme premium zone. So if I'm to look for potential sells on the dollar, that is going to be from this key level. And as you can see so far, we're not really far away from that key level. It's probably around, I wouldn't be surprised to see a run on this liquidity here. And that's around approximately 2% move to the upside, which price can do that in a week. So I wouldn't really be surprised to see an expansion to go to the upside. And you have to take note that this is potentially today is 27th, so tomorrow 28th, which means the new month is basically going to start around Monday or Tuesday. It's going to be a new month, and the Friday after that we're going to have non-farm employment change, which is a huge is a big high impact news that creates a lot of volatility into the marketplace. So it's either going to drive us into that premium zone, or it's going to take us to the downside. But personally, if I was to pick a side, I'll pick the fact that it's going to take price to expand to the upside, potentially to rally above this low resistance liquidity resting right here. So if we look at this right here, if we go to daily time frame, you can see right here on daily time frame, right here we still have low resistance liquidity. So I wouldn't really be surprised to see an expansion to rally above that low resistance liquidity, to expand above it, running out this buy side liquidity. So that is what I'm watching for the dollar. And if you do have any questions based on that, feel free to drop it in the chat. So for now, I still remain bullish on dollar until we come into this extreme premium zone. And once we're in there, then that is when I'll be watching to see a significant 4-hour shift in market structure to the downside. The moment I see that, that is when I will be confident in looking for a buy on Aussie on Euro US dollar, and also on the pound dollar as well. Then that being said, we're going to take a look at what's happening on Euro US dollar. So as you can see, for Euro US dollar, the trade idea that I outlined the other day, and as you can see, this was the trade idea, the take profit, the entries, even though we didn't get into the trade because I didn't really want to sell against the overall trend, which is bullish. But you can basically see how nicely the take profit position got violated. And the first entry 1:6, second entry 1:5, third entry was a 1:6 as well. So yielding a total of around 18% on just one setup. You can see just one setup can deliver awesome results, and you don't even need to take another setup for the rest of the month. Just one trade would deliver the entire thing you need for the month. So you can see so far, price delivered nicely to the take profit position. And you can see how we play this. We need to understand where the market is going for the dollar, and then we can use that to trade the euro, the Aussie, the pound. So that is how we play the game of trading, because if we don't have an understanding of what dollar is going to do, it's going to affect our directional bias. So this is basically how understanding that the dollar is bullish heading to extreme premium. That means euro is going to be bearish on the intraday level, and we're looking for low resistance areas price can easily smash through. And right here is the low resistance area. You can see the low resistance liquidity. That means if we had even used our take profit position to be this overall low right here, which is the overall low of the low resistance liquidity, if we had used that key level, you can see that price still would have tapped our take profit position. But personally, I would never advise you to put your take profit position exactly at any low or any high. Try to put your take profit position before it gets to that low. That is why you can see that the take profit position, when I did this analysis, I was putting it right here, a few one or two pips before it gets here, because sometimes price can actually come very close to that position, reverse, come back to your entry, and then take you out at break even and then continue lower. So that is why it's best to just give it a little room, 1, 2, 3, 4, or 5 pips before it gets to that destination, so it will properly take you out. So even if you're busy and you didn't even know what's going on in the charts, you can come back and see take profit hit, which will be awesome. So that is my analysis on Euro US dollar and what I'm anticipating to see in the marketplace. If you do have any questions, feel free to drop in the chat. The next one, we're going to look at Aussie dollar. Now, Aussie dollar has been in a very weird, it's had a very weird market structure, price action. It's been going up, down, up, down, up, down. This is one thing that I don't like to trade. When the market is inconsistent, not showing a clear directional bias, whether it's going to the upside or to the downside, I do not engage in things like this. I do not try to sell it. I also do not try to buy it. The reason is because, as you can see, why I wouldn't try to sell this is because overall, weekly, we're still bullish. 12 months, we're still bullish. High, low, break of structure, came back for a retest, expansion, then we're down here. So right here, I'm still anticipating for a potential continuation to the upside. My overall drawn liquidity remains the extreme premium, inefficiency at the extreme premium. Resting right here, that still remains my overall drawn liquidity. I still want to see price drawn up to drawn into this key level. I still want to see that expansion in there. Now, that being said, if you look at where we are, if I want to buy, I want to buy at a discount position. This line right here is equilibrium. Anything below it is discount. I want to buy below this line. I don't want to buy above the line. I want to buy below the line and continue higher. And right now, we're not below the line. And I'm not going to try to buy it from here. And I'm also not going to try to sell it into this position, because price can decide to first reach this destination before coming back down to a discount. That is 100% possible. It can decide to do that, induce all this low resistance liquidities right here. So traders will pile up so much liquidity, stop losses, stop losses, stop losses, in anticipation for this to continue higher. Price could actually wipe them out. But now trying to sell it, it's literally, in my opinion, a suicide mission, because you don't know which area price will react from and continue higher. Yes, if we look at this and say, let's do an analysis for a sell, this is a high, took liquidity, would like to see at least a 15-minute shift in market structure to the ups, to the downside. Now we'll go to 15 minutes time frame, and we're looking for potential lows. The only significant low that I'm seeing right here is this one. If when we came to the downside, if we had broken this low, then yes, I would have been very confident to look for a sell when we come up here to potentially continue lower. But we didn't really break any significant low. You have to take note that if the swing low is not broken, there's a high chance that price will still continue towards whatever direction it's going to. For example, this is the swing low and this is the swing high. Yes, we do have this low resting right here, but it's not a swing low. Price can actually violate this low and still continue higher to run this high, because this low right here is just a low and a high. It's liquidity. But this one is the significant one. This is the major low that created this major high. So the fact that price came to the downside to take this low, it doesn't give any guarantee that we're going to the downside. It only means that we're in an indecisive phase of the market. And that is why you can see when price came up here, traders sold it, were in profit, price spiked up, took all their stop losses. After taking their stop losses, spiked down again. Now they're like, oh, it took my stop loss, it went towards my direction, let me look for another entry. Now they're looking for another entry from here, selling. Now, it doesn't mean that trade won't work. There's a high probability the trade can work, but personally for me, it's a very low probability for me to look for a sell when the overall market direction is showing me bullish, that we could potentially go to the upside. So a lot of traders are going to be selling this like this. So that means there's liquidity here. Price can still decide to spike up, run the liquidity, and then spike down again. So that is why personally I wouldn't trade this for a sell. It can work, but I personally wouldn't put my money on the line for a sell on Aussie dollar, because Aussie dollar is very bullish. All we want to see is for price to come to a discount. Whenever that is, whenever it happens, comes to a discount, we look for a buy to continue higher. So for now, as you can see, we're still at this inefficiency, and I'm gonna watch to see the reaction, whether price will use this inefficiency as resistance or whether it's going to use it as a support to continue higher. So one of the two is going to happen eventually. It's either going to be a resistance zone or it's going to be a support zone. So that's my analysis for Aussie dollar. We're going to take a look at GBP US dollar, what the market is doing as well. So for GBP US dollar, as you can see right here, I did this analysis last, I think it was a Monday. After the analysis, I said after price mitigated this key level, I said I would like to see a 30-minute shift in market structure. And as you can see right there, price created a high, created a low, broke structure. I outlined this high and I said if I wanted to buy it, I was going to put my entry right here, stop loss, the low. And then after that, I still looked at it again, went back to my analysis on the dollar. Dollar still showing me a lot of strength. I just decided not to take the trade. And even though someone was asking me why I didn't push the trade anymore, the reason was because I didn't trust the trade. I wasn't confident in taking the trade because everything didn't align properly for this trade to work. And one of the things that didn't align was the dollar. The market structure on the dollar on the intraday level was still bullish, and I was seeing a lot of potential push to the upside on the dollar, which means there's a potential push to the downside for the pound. So rather than taking a risk when I'm already seeing those telltale signs that this could actually come to the downside to run this liquidity, instead of me taking that risk, I just didn't take the trade. And as you can see, eventually the trade didn't work out. And if we had taken it, we would have taken a loss on this one. So one thing to take note of from this is whenever you do an analysis and you feel it in your guts, there's a reason why this trade is not going to work, and you have good reasons for it not to work. Not because you're fearful, not because you're greedy, but because you can see the facts. The technical analysis are showing you this trade has a high chance of hitting your stop loss. All you can do at that point is to not take the trade. Because the moment you take that trade and take a loss, you are going to beat yourself up and you're going to have that fear to take the next trade. So that being said, as you can see, trade didn't work out, and I'm happy I didn't take it because a lot of things didn't align properly for the trade to work. So what we now do is we start to look for potential areas the price could come to, and how to take opportunity of that. And if we go to daily time frame, you can see that we still have this inefficiency here, and also there's still inefficiency here as well. So we're going to be watching it. Potentially price may still want to come lower, like you can see on the 4-hour time frame. So if we're looking at 4-hour time frame, you can see here we have this high get broken, and this was the last down close candle before an expansion to break that high. So this would be a much better area to look for a shift in market structure. So what we do now, we take this and we put it down there. So we wait to see price come down into that position. Then if eventually price comes in here, then we'll look for a 30 minutes, a 15 minute shift in market structure to the upside. Once we're in there, we look for a 15-minute shift in market structure to the upside. If we see that, then that's when we will look for a buy for this to continue higher. Take note, we still have this low resistance liquidity resting right here as well. So I wouldn't be surprised to see price eventually rallying to the upside to take out all this low resistance liquidity. So that is my analysis on British pound, British pound, US dollar. If you do have any questions, feel free to drop it in the chat. The next one we're going to take a look at is Euro GBP, what it's doing so far. As you can see, Euro GBP went to the downside, expanded again to the upside. Like I said, I want to see it come up here. The moment we're up there, that is when I'll be interested in Euro GBP. So for now, we're just going to be watching it closely to see what the market wants to do. And the moment we see the market doing what we want to see it do, that is when we execute. And until then, we're just going to be on the sidelines on this one. So that's my analysis, and that's what I'm watching so far to see on Euro GBP. So the next one we're going to take a look at is USD card. So for USD card, I was just doing some analysis on USD card, and personally I still would prefer to look for a buy on USD card. I outlined this key level, and I was watching this key level very closely to see what the market would do from there. And right here we'll have this 4-hour inefficiency here. Now we want to see a potential shift in market structure on the 15 minutes time frame, and right here you can see we'll have a high and we'll have a low, and then break of structure right here. So the next thing we focus on is to look for the last down close candles, potential areas price will come down into. So you can see right here, this is, so the reason I use the line chart is because I really want to see the last down close candle before an expansion to break this structure. So we go to 3-hour time frame, 2-hour time frame, and we can see this is the key level that I want to use as a support zone. So the moment I see price come down here, what I want to see is a potential 5 minutes shift in market structure. So in here, in this zone, I want to see 5 minutes break of structure to the upside. The moment I see a 5 minutes break of structure to the upside from this key level, I'll be looking for a buy to continue higher on this one. And I'll be targeting potential low resistance liquidities right here. Go to daily time frame. I'll be targeting that low resistance liquidity, nothing more than that. If I do catch a buy from here, I'll be targeting this high right here. So I'm not going to try to target this overall high. I'll only target the easy low hanging fruit area, and that's about 126 pips. And if I'm trading it with a 5 minute shift in market structure, that will really be very, very, very beautiful, because the stop loss is going to be small, and as well the risk to reward is also going to be higher. So let's just look at what it's going to look like. For example, we see price coming down here, creating lower highs and lower lows. So let's say, for example, we eventually come down to take liquidity, break structure. I'm using the high as entry. And right here, stop loss this low. As you can see, that's literally almost a 1:10. That's a 1:10 risk to reward ratio, which is incredible. And potentially, if we can catch this trade to potentially rally to the upside, that would be very beautiful. And we can just take that opportunity. So that is what I'm watching for USD card. If you do have any questions, feel free to drop it in the charts. And another one we've been watching as well is gold. So gold seemed to be very close to my point of interest where I want to buy from. And before that, I still want to see a run on sell side liquidity. And I also like the fact that we've actually also created liquidity here, low resistance liquidity. And the reason I like to outline these key levels is in a situation where I'm in a buy, I know where to take profit, where to scale out, where to close positions, easy, low resistance liquidity zones, low hanging fruit areas. Once I'm in a buy from here, this will be my first target because this is an area, low resistance, and a lot of traders must have traded the stop loss to these highs, and I'm anticipating for price to rally above those key levels, run the stop losses, and then I can throw my stop loss to break even, take some profit off the table, or trail stop loss to significant profit area, and then allow price to do its thing. So that is what I'm watching for gold. Nothing really much else going on for gold for pretty much for some time now, and we're not far away from that key level 1.2%. Price can do that in a day, so it could be next week because today's Thursday, so there's not really much else the market is going to do for now, in my opinion. So that's my analysis for gold. We'll have a brief look on oil. So for US oil, it's been in consolidation after breaking this significant 8-hour high. I still want to see a potential retest at the discount zone. Potentially extreme discount zone will be the most preferable area I would like to buy US oil from. And if we do see it come down there, then we'll take the opportunity. But if not, and it keeps going to the upside, then we'll just call it a day and do nothing on that one. So that is my analysis. And we take a look at NZD US dollar, the key level I outlined, the inefficiency here. I'm still watching it very closely. And if we go to weekly time frame, you can see on weekly time frame, price actually mitigated this inefficiency. So I'm still anticipating for NZD US dollar to go to the upside. And if we scale down to 4-hour time frame, we can see we'll have this nice, beautiful inefficiency there. So if we see price come down there, we'll be waiting to see a 15-minute shift in market structure. If we do see that, then we'll look for opportunity to buy NZD US dollar to continue to the upside. So that'll be all from me for the first live stream today. I appreciate every single one of you for tuning in, and I'll talk to you all next time.